Good morning, afternoon, or evening from wherever it is that you're logging in from. John Henry here, SSFTG from the Wood Hood. Welcome, welcome. Welcome to the video. This one obviously looks a little bit different than our normal videos, and what I'm talking about this time around, and what I'm kind of jokingly calling Thirsty Thursday, is going over some interesting trading zones and occurrences that are happening in the market. Before we jump in, of course, we always have to take care of the important legal stuff. Now, make sure to read through the CFTC rule on the screen. There's a reason that I have it there. Read through the whole thing and understand everything inside there. And understand the simple fact that I'm not a financial advisor. I'm a talking voice on YouTube. I was going to say talking head, but the webcam's not working yet. I'm a talking voice on YouTube, and we're just going over some interesting charts and stuff. Do your own homework. Do your own due diligence. It's your money. Take responsibility over it, right? All the normal common sense stuff. So, after all of that fun stuff, welcome to the video. If this is your first time on the channel, welcome my friend. I hope to earn your like and subscription today. Make sure to smash the like button and subscribe to the channel and all that fun stuff. It does a world of good for the algorithms and puts these videos in front of more people. When we're taking a look at the markets, we've had a lot of things going on, and one of the most obvious things is that Bitcoin, along with a lot of the other index markets and futures and stocks, and things have been getting absolutely pummeled over the last few months, really, since, I mean, dare I say, the beginning of 2022 hasn't exactly been so great for the markets. We're seeing some pretty hefty pullbacks. Bitcoin had a high of 69,028, and it depends on the exchange that you're looking at where that exact high is. But we've pulled back all the way to a low of 15,596. Again, that low depends on the exchange that you're looking at. But when we're looking at this overall pullback move, why is it pulling back? Where is it pulling back to? Are buyers coming in down here? Should we be afraid that there's going to be more? What's going on from the crypto side of things? And then we'll also jump into some of the US markets as well, like the NASDAQ, the S&P, take a look at gold and crude oil and all that fun stuff too, so we can kind of get a good gauge as to what's happening across the grand scheme of things. So starting off on Bitcoin, we're going to need a bit more history than I have here. This only goes back to 2018, and that most certainly is not the beginning of time. That's just the beginning of time for this data feed. So let's go into the crypto side of things and look for Bitcoin USD, and we're going to go out some of the older exchanges that we're going to look at, right? Like Bitstamp, as an example, is going to give us some data that goes back pretty far. Now we're talking Bitcoin down at $2.22. That is more than enough information for us to utilize. And this gives us a good idea as to what's going on. We can even zoom out to a weekly chart to see from a weekly perspective, from its inception, what does Bitcoin look like? Now, I know that this chart looks a bit deceptive. This looks incredibly bullish, and to be fair, we'll get into some reasonings as to why that may be. But remember that logarithmic scaling is on. So if I turn logarithmic scaling off, this gives you a realistic look with 0 to the top as your scale, what this actually looks like. There has been a catapult to the upside. I mean, absolutely monstrous rip. When they broke back above 20,000, that's when things kicked off. Logarithmic scaling keeps things in more of a percentage view so we can see things as they really are. One thing that we really want to take note of is how repetitious Bitcoin is in its cycling, right? The market has these really, really strong blow-off moves and very sharp pullbacks. Strong blow-off move, sharp pullback. And it usually just grinds its way down for a really long time, right? Really long time, and then sharp breakout. And then grinds its way down for a really long time, and then sharp breakout, right? That's generally how this is moving. But we can go into this a little bit further and break this down by super cycles, going into the daily perspective and zooming out and seeing what are these pullbacks looking like? What are they actually doing? This super handy price range measuring tool will give us an idea. The low at $2.22 had a rally all the way up to $16.34. That was a 631% rally. Now, when we take into account the pullback that happened, it doesn't look that big, thanks logarithmic scaling. But if we look at percentage, that's a 56% pullback. That's $1,000 investment going to a little under $500 in very short order, right? So keep in mind, these pullbacks may not look very big, but logarithmic is on, so we've got to pay attention to the actual size of these. Now we're going to leave these measurements on the screen for a while because these are going to come in handy. After we've got that breakdown, we had a really, really strong rally to the upside where we put in a high of 3,559%. That is an absolute truckload of a run to the upside. That is crazy. They went from a low of 699 to a high of almost 300, 259.34. That's nuts. Now again, after they made that monstrous rally to the upside, what kind of pullback did we have? 82%, right? So remember, these pullbacks are dramatic after we break those new highs. That's the key. We break a new high, then pull back. We break a new high, we go screaming up, and then we pull back. Where is that pullback usually going to? And when we're inside of these little cycles, when does it finally break out? We've got this big push, and then it goes higher low, higher low, higher low. They're all higher lows that just kind of trapped some of the inside ones, and then grinds its way up to a new high. If we look over here, we've got the big blow off low, but here again, higher low, higher low, higher low, off it goes. So when we're looking at the current cycle here, we've got another really strong breakout to the upside. From the bottom of that blow off to the top, we have 2,485%. That went from $44 to $1,100. Another monstrous rally to the upside. But where's the pullback, right? All of these were catastrophic pullbacks. I mean, these things wiped out 50% plus. If we look at this dip from the top all the way down, guess what? That's a 67% pullback. But what did this one do comparative to what happened before? We did not have higher low, higher low, higher low. This actually went down to a new low. Is something changing? Now, this is where we obviously have the benefit of hindsight. We know nothing changed, but the way that this approached it was very trappy, and you'll notice how much longer this took. This high was made in 2013. All of the other ones went from, April in 2013, finally broke a high in November, and then went screaming higher. The last time they poked a new high was in August of 2012, and they went screaming up to a new high in January of 13. They didn't stagnate for very long, a few months, and then broke out to the upside. This one had something different happen, therefore we expect something different to occur, and that's exactly what's happening. It had a much larger pullback. Remember, this is still in 2014, 15, and it's still pulling back down and down and down. So if we utilize some of these historical percentages, what do we have to work with? The only other one is 82.67%. So if we measure off of the top down to 82.67%, give or take, 6.2, whatever, it's not going to be perfect, but right around there, we can see that that's right about where price is comparative to the last historical blow-off. Now, we have to ask ourselves, did something interesting happen here? Well, not initially. It kind of blew through it initially, but now we pop back above it. Do we treat this as support? Hey, what do you know? It's being treated as support. We're getting some buying pressure. Things are shifting. So this is why it's so important to utilize these historical pieces of information, because they give us a really, really nice guiding light. But remember, this is a little bit of a different scenario. Did this end up rotating back up to a new high from this historical pullback? And along with that, where did it actually go? The pullback from high to low in this case is 87% so far. Let's continue on and see how this goes. We have a break of a new high. Now we start to see the importance of where do they want to go from here? Do they want to maintain, or are they going to break back down? This area right around $204 is a very nice zone of support, but we're starting to work our way back up, and now we break our highs. So what is our expectation from here? The last rally, the smallest one, 630%, 3,600%, 2,500%. So, I mean, if we're looking for a median, I think expecting at least 600% to the upside makes some sense. And from that measurement, that would be at 153 all the way to the highs. Well, guess what? We're hovering at this near double top at about 600%. It's actually now with this new high at 800%, breaking even more aggressively up. So we're starting to break aggressive, right? It's starting to rotate higher. What's our next expectation based on history? 2,400, 2,500%, give or take, right? So 2,400 tells us that we should expect around $3,800. The market gets up to that area, starts stalling out as we see profit taking, and begins breaking out through that. What's our next one? 3,600%. Let's keep this going and see what goes on in those areas. We're starting to hover in that area and we break higher. Now we're breaking into new ground. This is phenomenal for the buyers as we go screaming on up, and this is that high that was made at near 20,000, 19,666. You want to talk about an ominous number. So once we've made this high and we start pulling back, what do we expect this pullback to be given history? History tells us that we should realistically expect either about a 50% pullback, 60% pullback, or a significantly deeper one, 82 to 87%, right? So when we zoom in and get rid of all of the noise, what do we see going on here? The first pullback, 40s, 50s, we see a lot of buying volume coming in, but none of them are getting those higher highs, higher lows that we need to see. We start dipping a little bit lower, now we're digging into the 70s, and looking backward, does that line up? Well, around 82 or so, it could possibly go a little bit lower. We had the high at 19,000. So far, they've had a low at around 6,000, but this doesn't line up with anything historical unless we start seeing those higher lows. We start seeing a little bit of higher low action, no new highs. We're starting to break down. Now we've broken another new low. So, based on history, we've seen what goes on when we break a new low. Look backward. The last time we broke a new low, it doesn't mean it can't rally. It doesn't mean that it can't have a nice pop to the upside. In fact, after it broke that new low, it had a 100% rally. You can't get upset by that, right? 100% rally is nothing to shake a stick at. So in terms of the overall momentum, it doesn't mean that this can't go from 6,000 to 12,000. But we have to be realistic. This is probably going to be drawn out, probably break another new low, and start pushing into these 80% dips, maybe even a little bit further. That's the expectation based off history, and we know that Bitcoin loves following its history. So going beyond that and waiting for what we want to see, higher highs, higher lows, or do we break down? And if it is going to break down, where do we expect that breakdown to be? Right around 82 to 87%, right? If we're measuring off of the highs down to the lows, so far it's only made it to 70s. So if we're looking a little bit further, where is our 82% start? 82% would be at around 3,500. And if we look at the top, the value pullback to 87, where does 87 put us? Right at around 2,500. So our sweet spot, our hot spot that we want to see buyers come in on is right around there. Right? That's the zone of interest that we really want to see come into play based off of those probabilities. Now, do we get that dip? Do we not get that dip? That's what we're going to have to wait and see. But based on history, that's what we should expect to see. And what happens when the market dips into that zone? Look at where we are. We're dipping into support. Immediately, we start seeing some support coming into this area. We do not have higher highs, higher lows, but we are seeing some supportive nature coming in. Now we've broken a new high. Now we've broken higher highs, higher lows. And it's interesting, isn't it? How coincidental that these probabilities and percentages line up with one another when we find the buyers. We always jokingly talk about the coincidences of the markets when you start breaking them down this way. But this is where the bottom in the 3,000s came in, and what we were talking about at the time and how this is very likely the last time we see these 3,000 areas. Now, we know, given the benefit of hindsight, that it had one more flush at 38.82 before it went screaming on off into the highs. If I remember correctly, that was some exchange glitch or something or other. I don't know, but it had some crazy flush over the course of a couple days and then went screaming back up. But notice, that's still a higher low. The important factors, going back to the basics, higher highs, higher lows equals uptrend, stays true, and it breaks its way back on up to a new high. Now, based on history, given that this pullback was nearly perfect, if we measure it out, it actually went 84%. We were measuring between 82 and 87 as the sweet spot. Good enough for me. That lines up right in it. What do we expect on this rally? Well, either we have a 600%, a 25, 3,500%, or this thing goes friggin' ballistic, 13,000% to the upside. We'll have to wait and see as far as where this wants to go. Now, we do know, again, benefit of hindsight, where this ended up going, but if we measure off of the lows, let's see where some of these percentages line up. 630% was right here. The market went screaming through it, didn't even stop. Okay, well, 2,400%, where is that? 2,400% is at 75,000, and we know, given the benefit of hindsight, that the market made it very, very close to that at 69,000 even before we started drifting on off. Now, where are we? Well, given the overall historical locationing of what's going on, we can expect one of two things on this kind of rally. We can expect a decent pullback, that's for sure. How big of a pullback? Well, let's break it down. Where are we right now? 77%. Does this line up with anything historical? Not really. I mean, realistically, we should be seeing between 82 to 87, 84%, somewhere deep in the 80s. Now, does that mean that this can't be the low? Absolutely not. This could definitely be the low. But based on history, and we know that Bitcoin loves its historical pullbacks, where should we really be looking for the dip? The dip would be at around 82% on the high side, down to around 87% on the low side. So from a value perspective, our hotspot, our same thing that we were talking about last time around, gives us a zone of support starting in the right around 12,500s to a low of 8,601. So we have to ask ourselves, is it realistic to assume that this is the low of the move? No. Is it realistic to expect that we could possibly see a 100% rally from 18,000 to 36,000? Yeah, definitely. It's happened before. Look at all of these rallies, even though they don't look that big, that's a 92% rally. This little inside rally was another 47%. This rally over here was 50%. This rally inside of that one, right there, is another 30%. So is it insane to expect some kind of rally before we get down to the zone of support? No, of course not. We could easily see a nice 20, 50, 70, 80, 100% rally all the way back up to 30,000s. But is that possibly the low? Based on history, I don't think it is yet. The low makes much more sense down in the 12,000s to 9,000s, where I think a lot of people probably have their stops. Now, I didn't necessarily mean for this to turn into a Bitcoin master session here, but that's kind of the idea that we're looking at as far as Bitcoin is concerned. Where's the pullback going to be, and is this the low? I'm just not seeing it yet. It makes more sense to expect some rallies, yes, but to expect a low of around 12,500s down to 8,600s as our baseline where buyers are expected to come back in. And we know from past history that it might take a while. So it's going to be important to see the support come in first because it usually stagnates. Now, there are some lightning rods down into those zones too. So again, there are some risk-reward things that we have to take into account here. But we are expecting a little bit more pull. Now, this video is already going on like 18 minutes, so this is way longer than I was expecting it to go on, so more of a mastermind session on Bitcoin than anything else. But that's the general idea that I'm utilizing to find these major value zones. It's nothing special, it's just using probabilities and seeing where the market is expected to go, and then placing the risk-reward based off of that. And based off of those calculations, that tells us that Bitcoin, well, I don't think this is the low yet. We should expect a little bit more. Now, before we jump off this video, I wanted to talk about some really exciting stuff going on back in the Upland metaverse side of things. Metsuda R over at MMVH has some really, really awesome stuff going on that I really think everybody should be checking out, especially if you're a big fan of football, and I use that in the global sense, of course, if you couldn't tell by the soccer balls all over the screen there. And I'm in the US, what can I say? Make sure to swing over to MMV Hodlings, and it is HODLINGS, good old hodl.com, and check out what's going on with the World Cup Challenge 2022. There's some really, really awesome stuff and some pretty big giveaways that you're not going to want to miss. So in short, to celebrate the World Cup 2022, MMV Planet Football, in collaboration with Upland Football League, or the UFL, is hosting a giveaway. Entries will be accepted starting at 5 a.m. PT on November 9, so we're already through that side of things, through the end of the World Cup tournament on December 18. So there is more than enough time to get involved with this one. To earn entries, it's simply a matter of getting people invited over onto the MMVH server on Discord and getting them invited over onto the UFL Discord server. Now, remember, when you are inviting people to get on the leaderboard here, make sure to not use the link that's provided in the About Us channel on Discord, because that's not going to work. You want to go to the Invite People area and use the link there. That way you actually get credit for it. Pretty important note there. I will have links for my entries, so if you want to use my links and help me out on the leaderboard, by all means, I'll have the links down below to get you sorted. But beyond that, that's going to be really the simple rules to get entered in. Now, make sure to take note of this part here. After joining, the person you invited must post a screenshot of their Upland profile in their verification channel to validate the entry. So make sure that you go in there and get all of that taken care of. You can earn a maximum of 50 entries through those invites, but there are some other really cool things too, like score predictions that can get you more entries. 1 entry per match for predicting the score of each of the 64 matches of the World Cup, plus 1 extra entry per match for correctly predicting the number of goals scored by only one team in each of the 64 matches, or 3 extra entries per match for correctly predicting the score of each of the 64 matches. So there are a lot of ways to get a bunch of points. It does break down some examples for you as well, so that way it clears things up and helps with the confusion side of things. And then a quick note, you can earn a maximum of 4 entries through score predictions per match. In knockout rounds, the final score at the end of extra time will be taken into consideration, excluding penalty shootouts, so some important notes there. 5 extra entries for correctly predicting the score of the final on top of that. And going in further with a few more notes, you have to post your score predictions for each match in the respective channels, which will open 3 days before the day of the match and close 1 hour before the start of the match. So you do have plenty of time to get them in there, but just make sure that you do it correctly. You're allowed only 1 score prediction per match, which you can edit as long as the channel is still open. And to make it even juicier, there are specials too. So you can get 5 entries for correctly predicting the Golden Boot winner of the tournament. You can get 5 more entries for correctly predicting the player of the tournament, and a whopping 10 entries for correctly predicting the winning team of the tournament. The World Cup Challenge 2022 leaderboard is updated so that you will be able to see that. It's updated around 11 p.m. Pacific Standard Time, and the final update is scheduled for December 18 and around 11 p.m. Pacific Standard. The giveaway draw will be held shortly after that. And then we can get into the rewards, which are really cool. There's a total of 200,000 UPICs that's going to be distributed across 8 lucky players. A player can only win once. First prize is 100,000 UPICs, second prize 50,000, third prize 25,000 UPICs, and fourth and eighth prize is 5,000 UPICs each. Remember, the World Cup 2022 kicks off early at MMV Planet Football at 5 a.m. Pacific Standard Time on November 9 precisely, so make sure to get those links and get registered on the according servers. That's going to do it for this one, though. I hope you enjoyed the video and going over our deep dive into Bitcoin and what the expectation is. And I'm super curious as to what your guys' thoughts are on the crypto market as a whole and what you guys are thinking. Where do you think the market's going to pull back? Is the bottom in? Is it ready to take off? Or are you expecting the same thing as I am? A little bit of a deeper dip. Interested to see, drop those in the comments below. I always love hearing from you either way. Make sure to get those links registered so that you can get in on the World Cup Challenge 2022 as well. We'll see you in the Discord servers there, and that's going to do it. So enjoy, rest up, and we'll talk to y'all in the next one. Thanks.